The new ISA tax year is upon us, starting from the 6th of April, which means it's decision time. Do you continue making deposits into your existing ISA, or do you switch to something better?
With cash ISAs, all that matters is the interest rate, but with stocks and shares ISAs, you need to try and find the one with the lowest fees, good customer service, the best functionality and the best investment range, or as many of these boxes as you can tick. The platform also needs to offer the specific investments that you want in your portfolio.
I've just transferred my main ISA from my old investment platform, Trading212, to InvestEngine, who will look after my stock market wealth in the 2022-23 tax year. I've been blown away by this innovative new platform for ETF investors, and I'm putting my money where my mouth is. But is it the best platform for your stocks and shares ISA? In this video, we'll show you how important it is to have a good ISA. We'll tell you how to transfer your old ISAs to a new provider. We'll have a look at the portfolio I've built in InvestEngine. And we'll go into why I'm so excited about this new home for my investments. Let's check it out. If you want to grow your wealth, you need a good stocks and shares ISA. Listen up, this is why stocks and shares ISAs are so awesome. You can invest in the stock market while being protected from capital gains tax, dividend tax, and tax on interest from bonds and cash. The best amongst them won't charge you high fees to do this either.
We use stocks and shares ISAs as our main vehicle to invest in ETFs. Our ETFs track the performance of thousands of companies from around the world, weighted by market capitalisation. Index investing in the whole world would have returned 8.3% annually on average over the 120 years from 1900 to 2020, according to this study by Credit Suisse. If you want to keep as much of that return as possible without giving chunks of it away to taxes and fees, then having a good ISA is almost essential for wealth building.
Use it or lose it. April the 6th is such an important date because for many investors, it's the date they decide where to place their next £20,000 of tax-free ISA allowance. Don't worry about your investment profits eating into this. Any dividends, capital gains and interest you earn in an ISA won't count towards it.
If you don't take full advantage of your allowance though, you're missing out. It's a use it or lose it situation. Of the 19% of the UK population who use an ISA, only around 1 in 5 of them use their full allowance, thereby receiving the full benefit. This is just over 3% of the UK population.
Time to switch ISA provider. If you're looking for a new, better ISA provider, never withdraw money from your ISA account to your bank account to put it into your new one. If you do, you will immediately lose its tax-free status and eat into your new allowance when you redeposit money that was already protected. Instead, you need to do what I did and fill in an ISA transfer form with the new provider. It literally took me less than a minute. The new provider then liaises with the old provider and sorts everything out. Stocks and shares ISA transfers should take no longer than 30 days, but this is a maximum figure that the industry has to quote, and mine took just 9 days.
You may need to do what Ben did and sell your positions in your existing ISA to cash before the transfer can take place if the stocks and funds you own on your current platform do not exist on your new one, or if either platform insists on it. This is the case with most of the commission-free platforms. By being forced out of the market during a transfer, you run the risk of missing some big returns during that time. Likewise, you can even benefit from it by avoiding any market falls while you're sitting in cash.
As it happened, I did make a small profit on the transfer. Sitting in cash luckily let me skip a 1% fall in the market price on my main fund. I had switched to Trading212 last year for their popular pies feature and lack of fees. Well, it turns out that InvestEngine's way of investing works very similarly to the pies feature with fractional percentage-based portfolio allocations. It also charges 0 fees on its DIY platform, but crucially, it has other features lacking on Trading212 that in my view makes it the better platform for ETF investing.
Why InvestEngine? Well, here's one pretty big reason, but more on the fees or lack of them later. First up, there's the special way in which you invest on InvestEngine. All the ETFs on the platform are available fractionally, which means you can buy exactly your preferred amount of each one just by setting your percentage allocations. On other platforms, you typically specify the amount of shares you want to buy, or the pound amount, but on InvestEngine, you assign a percentage of your portfolio's value to each fund. With most other platforms, you are forced to keep a spreadsheet alongside your portfolio as you need to monitor how your allocations drift away from your target allocations. You'll need this spreadsheet to then calculate what you need to buy and sell to rebalance this. This is extremely irritating and it makes it impossible to understand your day-to-day position. The good news is that with InvestEngine, you really don't need a spreadsheet anymore.
This is my ETF portfolio on InvestEngine since I made the switch. I have set my ISA to invest 58% of my money into the Invesco MSCI World ETF, which covers thousands of shares from countries in the developed world, 16% to each of the MSCI World Small Cap and MSCI Emerging Markets indexes, and 10% allocated between gold and silver to provide a bit of diversification from commodities. We call this the Money Unshackled Ultimate Portfolio.
If we go back to the portfolio overview, we can see what that all equates to in pound amounts. This is the website version, but they also have a very clean and easy to use mobile app which shows the same information. The percentages here are showing your target and your actual allocations.
Over time, your investment mix will naturally drift from the percentages you set as the market moves. Correcting this is as simple as clicking on Rebalance Portfolio, perhaps once a quarter or once a year. Other cool things in this menu are the simplicity with which you can adjust your regular monthly deposits, and this button here, Analytics, which was what finally clinched it for me to move all my holdings to InvestEngine.
Before we move on to how impressive those analytics are, we have to let you know about these amazing offers for new customers. InvestEngine are sponsoring this video with an offer of a £25 investment bonus to all new customers who open any account type with them via the link on the Money Unshackled offers page.
In addition, for a limited time only, you can also get up to £500 cashback for new customers who open an ISA account and fund the account or begin a transfer of an old ISA balance before 6 PM on the 5th of April 2022. The more you invest, the higher your bonus will be.
Inside the analytics. We said earlier that InvestEngine does away with the need for spreadsheets, and the analytics area is yet another reason why. When we were designing the Money Unshackled Ultimate Portfolio, it took us days of careful investigation, Excel modelling of fund breakdowns, and endless tweaking to get a mix of funds that gave us the right mix of large to small caps, regional split, sector weightings, and market cap.
But InvestEngine Analytics breaks down the contents of your ETFs for you. The Regions tab shows which regions of the world you are investing in across your whole portfolio. For instance, our target for North America is 49%, which is actually 55% of the equity after stripping out the precious metals. This is in line with the US's market capitalization.
The Sectors tab shows us that Ben is nicely spread across all the main sectors in the proportion that we would like. The Holdings tab is very useful in that it shows you what your ETFs actually represent in terms of stocks. There are effectively 6,878 stocks in Ben's portfolio, and his percentage holding in each of them is listed here.
Previously, I've bought Facebook stock, but before I did, I wanted to know how much of it I already owned through my ETFs. Well, if we look here, I already own £140 of Facebook stock via my ISA. Having this information immediately to hand is quite useful.
Finally, the Asset Class tab shows your breakdown of equities, bonds, alternatives, which includes commodities like gold and silver, and uninvested cash. Ben has just set up this ISA, so the weightings haven't yet drifted, but if we check out this smaller account that we were using to test InvestEngine out previously, we can see that the war in Russia and inflationary pressures have massively pushed up the price of gold. This is probably a good time to rebalance.
The investment range. I'm investing in 5 ETFs. In my view, the only 5 ETFs I need. But if you think differently, that's fine. There are over 500 ETFs to choose from, with more being added all the time, including, as we showed in this video, all the Vanguard equity ETFs, even the ones that Vanguard themselves don't offer on their own platform. What we love the most about their range though, is that we've been able to influence it. We asked you guys in a previous video what ETFs the Money Unshackled audience wanted to be added to InvestEngine. You answered, we fed back to InvestEngine, and they added your ETF suggestions to their investable universe.
One point against the platform is that it doesn't offer individual stocks, only ETFs. In this, it's most comparable to the Vanguard platform. Unlike Vanguard though, there are no platform fees on InvestEngine DIY. The range 2 is infinitely superior. InvestEngine has decent analytics built in, and the act of buying and selling is much more user-friendly. It's a smart but simple ETF platform designed for index investors.
InvestEngine is still in its infancy, and maybe one day they will add individual stocks to their universe. I occasionally like to dabble in a few stocks, and will continue to do this on other platforms, but for my long-term freedom fund, it's ETFs all the way. The ETFs in my InvestEngine ISA are there to see me through to retirement.
No fees. What we really care about at the end of the day from an ISA provider is that the fees must be low, otherwise you're fighting an uphill battle trying to build wealth while fees actively undermine your investments. InvestEngine DIY accounts have no fees. No trading fees, no platform fees, no FX fees because all the ETFs are priced in pounds sterling, and there is no additional fee for an ISA like there is on so many other platforms.
Question of the day: will you be joining me on InvestEngine? And if not, what features would they need to add to convince you? Join the conversation in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.